Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. I'm sure you've heard by now of the devastating terror attacks in Brussels. Our hearts and prayers goes out to everyone who involved, families, peripherals, just the whole situation. It just is horrendous. And I don't know if it's going to change. This is the world we live in. All we could do is really just live our lives, protect our families, and just be aware of things around us. And hopefully at some point, there's an answer to some of the hatred out there. If you would have thought today coming in with the futures down 10 handles with that kind of news on the tape, you probably would have thought we could have been down 20 handles or 30 handles. And after a huge rally that we've seen, sellers could have had some power here to press. Well, we came in the morning call. I gave you some pivots to watch to try and put your opinions on the side, because all day long you're going to be hearing about all the devastation on TV and the potential of more of it, and that could scare people and scare the market. So we wanted to see what the market had to say. Go to the chart of the SPX, and all in all, market didn't really do much. It held the 8-day moving average and went sideways for another day. We started below yesterday's low of 243 with a low of 240-ish, and then just came right back up and gave a little bit of a doji close. So right away, just another day in the life. If we take out tomorrow's low and close below it and fail here at the 21-day moving average, maybe that'll change the trend a little bit and we'll get a bit of a corrective move down to the 200 or the 21-day. But at this point, is it a false sense of security? I don't know. All I know is that today, markets had a lot of reasons to go down and it didn't. So maybe if you felt like you got lucky and you were all in long, or you had a lot of longs and lined up into the the lack of weakness, great. But if you laid in to this, getting heavily short, you're really seeing no signals of that, yet, except for we didn't have a close on the highs day. Again, until this trend changes, I would just be a little bit careful. I know a lot of people started, shorting when we came in here and never reversed. Okay, we had we never closed lower. We had the red dog reversal to the upside. Then you had these 2 down days, closed on here, guys went out short, boom, got engulfed. You could have, covered right here and not been involved for another painful move. And then again, right into the 8-day was saved, okay, closed back above it. So now we were a little extended from it coming this way, so we'll see what's next. Let's take a look at some sectors. Qs, still hanging the 8-day. I'm not going to start drawing all the lines. The trend still here is your friend. Russell, IWM, still holding the 8-day, still flagging. I'll draw some lines here just to, get you to show you how patterns repeat themselves and things are repetitive. Well, this is when, it went above this lower range, big move up, extended from the 8-day, came in, held here, looked a little wishy-washy, got back above it. You had this bull flag type pattern, and now all of a sudden, it's holding it again, and maybe you get more. Now, these base-on-base patterns and these bull flag type of patterns after an extended move, you don't have to go to tier 3. You just trade the patterns if they happen to get above it, make some cash flow, net some money, and move on if you're uncomfortable. Okay? If you don't want to do anything, then don't. But you have the moments where you have these inflection points where you can make money, even in the spiders. When it went below 203.80 and came back above it, went another $1.20 with not a lot of risk. We opened below the prior low here, held the 8-day, and then had a $1.20 move. If you look at the 5-minute chart on the spiders, where you want to do risk reward, okay, here it opened down. So if you trade, if you were flat overnight, this was your move down, okay, held right here. As soon as it got above this little spot, which is, look, what a quinky dink, your 203.80, which was the prior low. Let's go all the way over here. You could have been along the spiders, or at least covered your shorts, covered, or you could have been long versus this and said, let me see if we get a gap fill. Let me just make some cash flow. And then from 203.80 to the gap fill, you just got paid and made some money. Okay, and then it came in, retested, held higher, gave you another little wedge type pattern before making new highs. And then you did have a bit of a rug pull. Here's like your ascending channel, broke the upper range, looked like maybe you wanted to go, and then came back in with everything going on around you. You would have thought would have been almost disrespectful to just power above. But from pattern number 1, tactical number 1, to sell some here, pulls back, buy some here, another little flag type pattern that held, and boom, another push. So from the open to 12:30, I don't care where we came from, you had, your opening setup for the first 90 minutes and then for the first half a day. And then some looking for the rug pull, you even had a little bit of that. So, as far as stocks and sectors, from my note, if you read my note every day, just so you know, it comes out every day in your mailbox by 8:30 with usually 25 to 30 stocks talking about levels, talking about, what probably could happen or what could happen, or if this happens, do that, if that happens, do this. And one of the things on there, high beta tech names. I was like, let's see what happens with Google, Netflix, and Amazon. Amazon reversed yesterday, gave you a red dog reversal, was downgraded this morning. I'm like, perhaps that can go green, or push a little bit higher. Amazon wound up, holding above yesterday's pivot. And if you bought versus that, you could have made $10 or so. And it even went above this. And if you want to look how fast this happened, versus spiders, you look at the 5-minute chart here, open down, and look at this first wide range bar, boom. What do I say about igniting bars? They ignite moves. You don't short igniting bars. If anything, you wait for to see what kind of retracement, and there was, absolutely none, here. It held not only the top 10% of the range versus the top third or top half. And then this could have been your next little buy once it went above the first 15-minute high and then filled the gap. And then it showed you power because it not only filled the gap, it went above the prior high and gave you another push, and then came back, gave you a small little afternoon setup as it held above yesterday's resistance, and then another push. So, on a 3 to 5 minute chart, you could have been playing Amazon too. And if you had a little thought from my notes saying maybe you can go green because of the reversal yesterday, even though it was downgraded, boom. Well, whatever. That was that. Everything else was a lot of wishy-washiness. Facebook. I'm still long it, but I would have liked a little bit more power. It had a decent move. First, moved above this 110's, been holding it. Tried to get above this little pivot, wasn't powerful enough yet. Maybe tomorrow it gets it. You could have been a buyer of it when it was red. When it went green, you could have bought a little bit for a push and just didn't work. And now we'll see what's next here. Still looks good. Still above this trend here. So it's happening. Just there's no real momentum here. But look where it came from. We'll see if that changes. We'll be a little careful there. Google also. Second time it tried to get above this little flag and it's having a hard time. Here's when Google traded above, this. Oh, why is this doing this? Let's go. You can see more like this. Google, Google's tough. First of all, it's thick and wide if you trade it, but trying to hold above this spot hasn't had much traction above resistance, but it's come a long way from the lows, and it's very thin and wide, so it's hard to deal with. Remember this breakout failure here? Well, if you get out of the way there, there's been some tradable moves here, but that's pretty, choppy. I guess where Sperling made most of his money was in the bios. If you remember last Friday, I'm like, the bios perked up, and then yesterday I was talking with Annabelle, which I do call my Belle. She's coming in soon. How maybe, they're back in play. They're looking for something to do. And basically you had the bios perk up Friday, had a little follow through yesterday with GILD and some things breaking out, and that was another thing. I'm like, maybe GILD, goes from, red to green because it was so strong. A rule is when you're down because of a macro event, you look towards the stock that was strong the prior day and see if buyers come back. So if you go to GILD, which was a strong stock, hey, look at that. Had a breakout and then opened a little bit lower and then gave you a trade through the prior day's high and boom, 2 days there. So if you trade GILD, at least that was a tactical strategy. The IBBs, look at that. They're kissing the 50-day. There you go. At this point, my 3-day rule, buy day 1, add day 2, sell day 3. So maybe, it flags a little bit because it's coming into some resistance, but nice little 3-day tactic. I got to give it to Sperling. He was all over it. Not much else I don't think happened. VRX, what did it do? A whole lot of nothing. Some guys are looking at this JUNO, which still looks like it's perking up. Maybe it gets up to the 200-day, but you have to be wary of some news. KITE. What's that doing? Hasn't done anything yet. I think Sperling dabbled in blue, which is just trying to think that, its stock's been absolutely annihilated, but you have to be careful with annihilated stocks. This isn't showing me anything, but who knows? Below every moving average, so I don't know. Take some options, but this just, look how, let's do the anatomy of this trade. Holy cow. Here was your gap up when this thing was hot, and then here was a trend from the lows that pretty much got broken, you could say, right here. Okay, that was your major support. That's when it lost the 8 and 21 day, came in, tried to rally up, engulfed it. Here was a decent bear flag to get out of the way. Then it lost the 200-day right here. So the 200-day was gone at 117. So if you use my rule where you get out of your investments when it's below the 200-day and stays below it, you could have been out at 117 even though it was a lot higher. Who cares? And then boom, all the way down to 46. Not your problem. So it's not Mark's problem. So he's trying to say, okay, a little trash for treasures trade here where this thing has been absolutely annihilated, and maybe some shorts get squeezed and you get a trade. That's what we do. We take advantage of areas of big ranges. If you sold here or got short here, or look at this engulfing bar. Whenever you see an engulfing bar that engulfs a whole range like that, you get out of Dodge. Whew. Anyway, so we'll see what happens there next. I'm just talking about trying to give you an education while making you money. Apple, had a decent move. Kind of talked about that also in my notes, saying that they couldn't sell it on an event day, and typically they try to. So maybe that means there's some buyers, and some buyers came in, went from red to green, and now it looks pretty good. Maybe wants to tag the 200-day. I made some money. I came in flat. I went green, bought some, sold some, and I have a little bit overnight. And I also have a little Facebook just for disclosures. SQ, real quickly, still looks good. I listed it in my note the other day. Still long some. Inside action. I'd love to see a little bit more inside action, and then maybe it tries to take this out for another move back to the IPO highs. Tesla finally had a down day. Stock's been on a friggin' tear. First red day. Doesn't mean we get another one. Maybe. I hope so, because I went out short a little bit of it. It has to get below this low to get down to test the 8-day. It seems to test it every now and then. So maybe it does it here. There's a big short report out issued today. Maybe it's a friend of Citron that issued it here. So we'll see what happens. I'm not going to get stubborn there. Maybe it tries to flag to continue, or you see a little bit of a pullback. It's definitely not the easiest thing to do. Lastly, let me just check out what a bank is doing here. All in all, JP Morgan. I know Goldman was weak, but you look here, you look at this little flag, it got above it and still holding that gap. So as long as it stays above this, seems like it might have another push to the 200-day. So in closing, I hate when you wake up to news like we saw today. As market participants, we have to put our emotions in the corner and try and figure out how to react, how to use pivots in stocks and sectors in order to trade out of existing positions when we didn't think something like this could happen, and either salvage trades or it's an opportunity where trades that open lower because of the news actually gives you more opportunities to add into weakness, and then it does what you thought it would do if that didn't happen. So you got to be prepared for everything every single day, unless you go flat every night, which is a whole nother different ball game where you could see how you can make money with some of those 5-minute charts I showed you before with those gaps. And we'll just keep moving forward. And hopefully, the world will keep moving forward, and we'll get rid of, the bad guys. And I don't want to talk about who the bad guys are and get into politics, but anyway, hope you did okay today. Have a good night. I'll see you tomorrow.